So I'm Alison. I'm talking today about my project on what the aggregate response to the climate litigation is. So first I'll start with why I'm interested in this. So we have all these surveys of investors about what they think about climate risk and ESG, and some investors care and are engaging, some investors are divesting, some investors aren't doing anything, some investors are hedging. So my question is, what is the aggregate pressure on a firm? So when there's an increase in risk in the market, what kind of pressure results from the aggregation of all these strategies? So if there's an increase in risk, is there more pressure because more people are engaging? Or if there's an increase in risk, is there less pressure because the ones who care are divesting? So that's my question. And then when we talk about climate risk, usually we're talking about physical and transition risk. But I argue liability risk is really interesting. It's an increasing trend, especially as the climate science is becoming more established. We're seeing more lawsuits, and they're increasingly becoming more successful in court. And there's also more momentum behind them. So after Trump was elected, there was anticipation that there'd be a scaling back of federal environmental policies. So we saw an increase in litigation as a way to influence firms in the absence of federal policy. So let me give an example. So because the motivation, these lawsuits, it's not just about monetary damages. So it's not just about paying a certain amount. It's also about injunctions. So getting defendants to do something or not do something. So for example, Shell was ordered to reduce their global emissions by 45% by 2030. So this is kind of the flavor of the lawsuits, trying to influence the firms through this channel. And then, so how are investors responding to this? And I argue it's interesting to look at relative to other climate risks because there's many events over time. So I can see the response, let's say the oil price went up or down on one day. I can kind of control for those things with many events. It's also relatively easier to divest from. So when we think of greenhouse gas emissions, that's pretty hard to get completely out of in your portfolio. But liability, maybe you can tilt. And it's relatively easier to engage with. So if I'm an investor, I can contact the firm and I could say, disclose this, do this, try to be the middle of the pack to avoid this litigation. Okay, so when we're talking about litigation, there's a bunch of different kinds, a bunch of different laws. So there's federal environmental laws, so vehicle emissions, violating Clean Air Act. There's common law, so one person is suing someone else for damages. There's financial law, so not disclosing enough about your risk. So there's a bunch of different types. And then the defendants can be firms, governments, or individuals. So I'm going to focus on the firms being sued. And I focus on the federal environmental because these are the most likely to succeed. The other ones are a bit more speculative. We don't know how they're going to go. And then the defendants, one issue with this is that defendants tend to be larger and more profitable. So I see how competitors are affected. So when Shell is sued, what do investors do about the other firms in that industry? Because if they're getting sued for this lawsuit, we can probably anticipate more lawsuits against the competitors. So that's what I do. And then so I have some outcomes. I still have 2 minutes left. I've been talking very quickly. In terms of the outcomes, I look at the stock price. I look at whether ESG investors change their holdings in these companies. Are they pulling out, or are they seeing this as an opportunity to buy more and engage? I look at shareholder proposals, and I look at ESG ratings. And then, so this is very preliminary. I need to think about it more in terms of controls, and I'm happy to hear more about ideas. But for the most part, I'm seeing after a lawsuit, the stock price of competitors in the same industry goes down. The ESG holdings, if you control for the size of the investor and everything like this, they tend to leave those companies. But on the other hand, I see that there's ultimately, there's kind of a short decline in ESG shareholder proposals, but it kind of goes up after a couple years. So I'm not sure if there was more private engagement and then it turns to public. I need to understand this a bit more. And then if I look at the ESG ratings, the competitors have a bump in their ESG ratings, but it's kind of temporary. So maybe there's kind of momentum and initiative behind ESG. We get a bump in ESG ratings, and then it kind of goes back down as we kind of forget about the lawsuits. So moving forward, I need to update. This data is only up until 2018, and a lot has been happening in terms of lawsuits and also in terms of engagement. We're seeing a lot of changes in terms of how companies are engaging or how investors are engaging and if they're engaging. So there's more to do, but I'm happy to hear comments or thoughts if people think there's something else that I need to think about. Thank you so much.